Hey, everybody, welcome to the morning market briefing, Tuesday, April 22nd, 2000, no, March 22nd, 2022. Man, it's been a while since I've had a good flub on the date, but March 22nd, 2022, hope you're doing well. Jumping right in with Russia, Ukraine. Biden seemingly opening the door to cyber attacks, almost like he he wanted to make sure he could remind Putin and the Russians that we haven't seen him use it yet, but it's definitely in his toolkit. Ben, what else is going on with Russia and Ukraine?
Yeah, it's kind of a confounding thing that he came out with just then. And Russia, for its part, said that they're not going to take part in this ramping up of rhetoric. So Russia said, we haven't used cyber attacks. Biden doesn't know what he's talking about. So it's just an odd situation from that perspective. But there are real consequences to all of this. In Ukraine, the bombing continues. I would say Zelensky has said, and this was the big news yesterday, that the country would hold a referendum if there was any potential peace agreement. So if Zelensky was to meet with Putin and come up with some sort of peace arrangement, that would go to the Ukrainian people for a referendum. I do wonder, so this could be taken one of two ways. One way is that this heightens the bar in terms of the ability to actually get something done, because not only do you need Zelensky on board this time, now you also need the popular opinion, but it also gives Zelensky a bit of an out, because he could do a kind of Pontius Pilate and say, hey, the people have spoken. I'm going to honor their wishes. So I think that's an interesting, so it could work either two ways. Either you can it could move them closer to actually having some sort of referendum, or it could move them further by raising the bar of what they actually need to do. The EU continues to debate the oil ban. It doesn't seem likely to me, especially with Germany not on board. So I wouldn't really put too much into that. They do continue to ramp up sanctions. The Netherlands are freezing assets of Russian oligarchs now. But overall, we're just kind of seeing this go country by country versus a united NATO response at this point.
Good deal. Thanks, Ben. Yeah, relatively lighter day, I'd say, on the news front as it pertains to Russia, Ukraine. And I kind of wonder if that's going to become a little bit more of the normal. I mean, we're coming up on a month of this struggle, and I think there is probably a little bit of fatigue, not only for consumers of news, but also those giving it. So I'm curious to kind of see just the flow of information, if there's any change over the next couple of days in the coming weeks. Tom, we heard from Jay Powell yesterday. He announced a special monetary operation. Looked like it was really going to damage equity markets for a while midday. They rallied back to close essentially flat. Talk to us about what's going on and what's keeping him up at night and how he's going to try to fix it.
Yeah, so we talked about his testimony last week, where he basically said that the biggest target right now is inflation, because if you don't have price stability, then you can't have a strong jobs market, you can't have a strong GDP. And basically, when he spoke yesterday, he doubled down on that, I would say, and then some, which is essentially, he said that they're going to have to get more aggressive in order to rein in inflation. And the exact quote is, "There's an obvious need to move expeditiously to return the stance of monetary policy to a more neutral level, and then to move to more restrictive levels if that is what is required to restore price stability." So what he's basically saying is we're still in an easing environment. We're having easy monetary policy because we're at a quarter point on the federal funds rate, and in order to get to a neutral level, and the neutral level is essentially what is the break-even level, and a lot of people say that usually that is the 2-year treasury, would mean that we'd have to raise at least 6 or 7 more times just to get to a neutral monetary policy, in order to, basically, instead of, right now we're on the gas, he wants to get to a point where we're not pushing the brake or the gas. We just want to get to a neutral level. And so that means he's got to be a little bit more aggressive. And he's saying, it's not really going to hurt the job markets. There's a 1.7 posted job openings for each person who's looking for work. And so that basically indicates to Jay Powell that he's got some wiggle room there. He can put some pressure on employment, and the trade-off being that he can basically limit growth a little bit, but he's going to stem inflation. And if he stems inflation, then that's going to essentially reverse his actions and take less pressure off the jobs market and more growth long term because we've got price stability. So while he was talking, the market dropped quite a bit. It rallied back to down just a little bit yesterday. And so we had really nice market resistance to the comments, but he's basically baking it in saying, hey, we're going to raise, probably do double raises, maybe even a triple raise sometime in this year in order to get to where we need to be. And rather than just drop that on us like a bomb, he's basically saying, hey, it's coming. We know, not exactly when it's going to happen, but start baking it in that we're going to have more hikes this year than originally anticipated. And so while he was talking, just watching the futures live, we basically went from an estimated 6 to 7 hikes in 2022. Now we're looking at 8.6 is the estimated number, and the odds of a double hike on the May meeting are about 70% right now. So if we don't get a double hike in May, we probably will get one, if not a triple hike in June, in order to get on track with where both futures seem to be in terms of where we need to move on the federal funds rate, as well as what Jay Powell thinks. So we're definitely getting into a very hawkish stance, and the market took it on the chin. Treasury market did not, though. We saw a significant flattening on the yield curve. We're down to about 17 basis points between the 2-year and the 10-year Treasury. And we crossed over a level yesterday that put us in it's the worst year so far for short-term Treasuries in 38 years, with the 2-year Treasury having just massive losses. So hopefully, my hope is that once all this gets baked in, we can get a little bit more pressure on long-term rates and maybe see a little bit more strength in short-term rates and get more of a normalized yield curve. Because if not, they start getting really aggressive with hikes, we're going to be inverted very quickly. The 5 and 10-year Treasuries are already inverted by about 2 basis points. So you get paid more money for having 5-year bonds and 10-year bonds. That's an unusual move or an anomaly in the yield curve. And the more pressure we get from the Fed, the more likely the front end is going to come up. And that's going to be tough if there's not more selling on the long end.
Good deal. Thanks, Tom. Yeah, markets showed some resiliency, which I thought was a positive sign. Right now, as we're looking, NASDAQ futures are basically flat, S&P futures up 20 basis points, Dow futures up 40 basis points. Nike's up about 5% on their earnings announcement. Ben, it seems like there were some positives, but also reasons to remain cautious. It seems demand and read through there seems relatively strong. Supply chain seems to be fixing up a little bit in terms of the actual manufacturing, but they're still having trouble with shipping. How do you kind of read Nike's quarter?
Yeah, I think so. The context of Nike is that coming into the results, analysts had been working themselves up into a frenzy, and so I was definitely a little bit nervous because analysts have been looking at data from out of China and saying that, especially on a lot of their internet companies, that Tmall, which is Alibaba's way to purchase products, they were saying that Nike is actually going down as a percentage. But China was actually better, substantially better than what analysts had expected. It was basically in line with what management had guided to. So management knew what was going on. Analysts kind of just worked themselves up into a frenzy on that. And so for that perspective, it was a better than expected quarter. On top of that, the North American demand continues to be very strong. As Andrew mentioned, in transit times have lengthened substantially. They're now 6 weeks longer than normal, which is up from 2 weeks this time last year. So really continuing to see lengthening transit times to get product to North America. All of their production is on pace and going well now, but it's just taking longer to get product into the stores. So as a result, they're going to be beginning their fall purchasing season earlier than normal in order to make sure that inventory is in a good spot. Their fiscal year ends in May, and there was some talk that they would provide guidance for the next fiscal year at this quarter. I didn't think that was going to take place given the uncertainties that are going around, and that proved to be correct. But they will provide guidance for the next fiscal year in June, and that's going to be a big one. And so how that demand reconciles, especially in China, because the demand's there in North America for sure, But we do still have some question marks about China as they proceed with trying to avoid more American goods. They're also doing this wholesale strategy. They've gotten rid of a lot of their wholesalers and basically said, hey, now Dick's Sporting Goods or Foot Locker, you have to essentially become a Nike shop. And you need to do things the way we want things done, or we're going to just get rid of you. And so they have a lot more bargaining power with their wholesalers now, which they're trying to leverage and really accelerate the growth of their brand. So I think Nike's doing the right thing strategically. I think that demand is certainly there right now, certainly in North America, probably in China. The question marks as we go into the next 12 months is going to be, how does demand progress in China and how does supply progress in North America? So those are the two factors we're going to be watching going forward.
Good deal. Thanks, Ben. Kind of on the China front, Alibaba is upping its share buyback to 25 billion over the next 2 years. That's a massive portion of the total valuation of the company, and kind of aligns with what China has said in terms of wanting to really enhance and improve their capital markets and be a little bit more business friendly. Ben, how much should we read into that move?
I don't think I wouldn't read too much into it. I think that this is kind of in line with what's already been said and therefore not a needle mover. I would say that just one other thing on Nike, though, going back to it, is that they're not seeing any impact from Russia, Ukraine. It's less than 1% of sales. And I think that that will continue to be a trend for a lot of Western companies as they report over the next 4 weeks or so.
Good deal. We're going to wrap it up there. We'll be back tomorrow morning at 8:30. Hope you guys have a great day. We'll talk to you then.